Hey everybody, and welcome back to the Teaching Tax Flow Podcast, episode 190. That's right, we're only 10 away from the big 200. It's not like it's our 21st birthday. We'll call it the 200. So it's another milestone for us. Today, though, as you probably read in the title, or somebody shared this link with you for this specific podcast, we're going to go back a little bit and re-answer and elaborate and dive deeper into those questions that relate to when do I need life insurance, and actually how that ties in with taxes and why you're here as a whole is part of teaching tax flow in the community. We're going to get into it here in just a moment. But Chris Picciurro, welcome back to your own show, sir. I know we got a great guest joining us, and if I remember right, he has a great way of explaining, an analogy of how life insurance is. So I look forward to that. But how you doing, man?
I am doing great. Very excited to have our special guest on today. I know I talk about this sometimes, but in the private CPA firm where I'm helping clients one-on-one, I get to interact with strategic partners and people that we work with, we eat our own cooking with, and then once in a while I get to bring those people into the podcast for the masses, and everyone has that opportunity to glean that knowledge that's usually set for these private rooms and these private meetings. Now, of course, we're not going to use names as far as clients, but just excited to bring you into that world. So we have an amazing special guest. John, you nailed it. Life insurance is part of tax planning. Make no doubt about it. In teaching tax flow, we know that the goal diagnosis, which is tax-free income and growth, is very, very important. And the goal, remember, legally and ethically reducing the tax you pay in your lifetime. It doesn't say legally and ethically reducing my income tax. We're talking about estate tax planning. We're talking about making sure that people that are relying on you are taken care of financially. And so we're going to be diving into this topic. Jason Weiss of Symphony Life is joining us. Someone that John, you and I have had the pleasure of working with and meeting with. So I will, without further ado, welcome Jason. Thank you so much for joining the podcast.
Chris, John, awesome to be here. This is going to be a lot of fun. Thanks for having me.
Well, we are excited to have you, as I said. Before we dive into that question, when do I need life insurance? What got you into this type of business with Symphony Life? And I know you're very accomplished professionally. I know you're an attorney as well, but obviously this is a passion for you. So we'd love to hear a little bit just about a little history and how you got to the pinnacle of your career being on this podcast.
Yeah. It truly is a pinnacle career. And quite honestly, being on your 200th podcast in your 200th year, you don't look a day over 190s, Chris. You look great. So as you alluded to, attorney by trade, 27 years since I became an attorney. Kind of early on, we would help clients on a lot of different things. And if you're a business owner watching this, you probably experienced this problem, which is you're looking to scale, you're looking to grow, but you always have to manage cash flow today. And that's kind of what the name of the podcast, even. You're managing cash flow always. So we looked at it as a bunch of attorneys. Hey, listen, any asset you're buying, insurance I know today, but any asset, whether it's a car you're going to buy or a piece of machinery, you could acquire assets one of three ways. You can rent an asset. I could rent a car. I could go buy an asset all cash, or I could buy an asset with financing. There's three ways to buy an asset. And when we found out early on and we started applying that to insurance, most people, they kind of had their head cocked. They go, what do you mean? I know I can get term insurance, or maybe I can buy insurance, but you can get a bank to buy it or bank to buy it, pay the premiums. And we said, yes. And we found out early on, Chris, is if we knew how to acquire asset, but the insurance agent doesn't, what else doesn't that insurance agent know? So again, we took a deep dive, again, this is 20 years ago, to the insurance space, and not just the asset, which is insurance, but the best and most effective ways to fund and acquire that asset. So we truly come at it both ways, which is what type of policy should you get? And then what's the most efficient way to buy and acquire that asset?
Right. And based on your season of life and maybe where you're at with your family structure, or maybe you're single, that can drive this. So what are some of the main trigger points for someone before they figure out how they're going to finance or acquire the insurance to realize I do need insurance, because I think that a lot of times people just unfortunately assume, oh, once I start having a family, once I have a child, now all of a sudden I magically need life insurance. What are some of those triggering points that people might not be aware of, and some of the ones that are pretty common?
Yeah. So broadly speaking, and I kind of say this, my daughter is 14 years old. She does not need car insurance. She's 14. But you could argue she could get life insurance. So the broader question of when should I kind of take a look at life insurance is kind of any time. Now, when we say anytime, there's a couple moments of your career where things will happen where life insurance is something I should really have a strong conversation about. And that is, as you alluded to, if you're acquiring assets, a home, cars, as you're acquiring assets, having insurance around those assets is a conversation to be had. Then as you kind of move down the trajectory, if you have a business, kind of those kind of things, as you're growing a family, those kind of things. And then quite honestly, insurance, aside from even being the death benefit component, is one of the few tax-free assets that we have available for us. So if you're interested in tax-free money, that's again one of those things that you should look at. So the answer to your question, Chris, you can have that conversation anytime. Now, it's different policies and different ways to acquire it. But if you're listening to this podcast and you have not had a life insurance conversation in a couple of years, I would encourage you to have one.
I found from personal experience, to be very transparent, I started my CPA practice when I was 27. Was not yet married, didn't have children, and I had a policy through my employer, right? And I was a CPA, and then a master's in business administration. I'm not trying to pat myself on the back. I'm just saying I was in that world, but kind of forgot to realize, wait, I left my job, started my practice. I don't have life insurance. And then I thought, 4 months later, I ended up buying a small book of business that had a couple of employees. And it hit me. If I get hit by a beer truck right now, I'm putting the livelihood of people that we're shedding blood, sweat, and tears together for. And I felt at that point, even though I didn't have dependents, I had people relying on me. And I went out and, got life insurance at that time. And then it ended up evolving into a more advanced structure. However, so the point is, there's a saying, you're never going to be as healthy and as young as you are now. If you're thinking, should I need it? I would err on the side of caution and at least look at it, because, even for people on a budget, couldn't they potentially, lock into maybe a term policy and convert it to a more permanent policy later?
Chris, you hit the nail on the head right there. If you look at insurance in general and all the different insurances, from homeowners insurance, to car insurance, to commercial insurance, you can buy any insurance anytime except for life insurance. Life insurance is the one you have to qualify for. So if you say someday I'll get life insurance, well, that day may be dictated by an insurance carrier that says you don't qualify. So I always say is, get the optionality today of getting the ability to get life insurance in the future to what Chris, you just alluded to, is simple term insurance. Term insurance is basically one of those things you have as a placeholder. I call it as an option to one day converting it, dropping it, doing whatever you want to do, but it locks in your health rating at whatever age and health you are today.
In doing tax and estate planning from my side, I can't tell you how many times I've had the situation where I've had teachers. My wife's a teacher now; she's a school counselor. But teachers, have retire, and they realize that they might not have any life insurance because depending on their situation, their employer-sponsored life insurance is not there. And quite frankly, let's be honest: when you're 60, 65 years old versus 25 years old, your health is everything could be different. So kind of other situations, I think a lot of times business owners forget that, especially if you have business partners or people relying on you, it's not only something that you should consider, it's something that you, to me, owe the people that you're, not just your family, but your people that you're working with. And let alone it could be an asset as well.
That's right. And inside the business, you've got two concepts working with you. If you're a business owner and you've got partners, one of it is, if you have partners, a lot of people have what's called buy-sell agreements, which is if one of the partners, something happens, the other partner gets to buy or sell the other shares. What I always say is, if you have that, but you don't have life insurance, where are you getting the money to buy that other person's shares? Number one. And number two is, if you have a surviving, if you have a partner in your business and that partner dies, you're now business partners with that person's spouse. So having life insurance in that context allows you, if you were to be the surviving owner, have the money from the life insurance, the ability to pay off the spouse, therefore making a clean transaction. The second part is this: you ask any business, Chris, your business, my business, anyone listening's business, the most important assets to most people's business is their people. Is their people. It's not the piece of machinery. It's not the building you're in. It's the people that make up the business. So I always say is, if we have commercial insurance, heck, if we have insurance on the copier behind us, if we have insurance on those hard assets, why don't we have the same level of insurance on the people that make up our business? And again, this is not expensive things. These are just things that I would be doing. We don't think about as far as like insuring key people in our business.
Absolutely. And if you're married, you have a key person in your bit. You have a spouse. And again, another piece of transparency. My wife doesn't watch or listen to the podcast, so which is probably a good thing because I'm going to confess some things. But no, in all seriousness, whether being a teacher, and I've had buy-sell agreements funded. I've taken care of a lot of things business wise. However, it hit me once we had the children. I'm thinking, okay, if I'm I had the higher income and she actually stayed with the kids for a while. If something happens to me, I want to make sure she's taken care of. What if something happened to her? I can't work the hours that I'm working. I would have to change my lifestyle, especially when our kids were super younger. And at that point, we looked at insurance for her. So if you are, in a marital situation, or even if you have you're unmarried and you just have a significant other you live with, and one person, makes a good, I don't want to say breadwinner, but has a significant amount of income, and the other one maybe is more of a homemaker. You need coverage on the homemaker, and I'm always looking for those gaps, those buy-sell gaps, those situations where I've seen it from a financial and tax perspective blow up in a bad way, because people weren't properly taken care of.
And
So,
Chris, on top of that, I'd say if you're listening to this, remember what I also said. There's 3 ways to acquire the insurance. This is not about having a big sum of money being tied up, that kind of thing. We can look at renting the insurance for a period of time you need it, or quite honestly, if you haven't looked at it, we can look at having a bank pay those premiums for you, and that's another option. Remember, every asset can be acquired one of 3 ways: rent it, buy it all cash, or having a bank finance it. And if you haven't looked at all 3, you haven't looked at the best way to fund potentially that liability.
well, and remember that 99.9% of the time, your insurance proceeds from life insurance, uh, guess what? We're all going to pass away. So someone's going to get these proceeds. That's going to be tax free to someone. And that is very powerful. I want to take a step back. It's kind of tie it together to that person that has never thought about life insurance, that maybe they have a little anxiety about even stepping forward. Maybe they've got a health issue. What's like the first step someone should consider, in some of their best practices we got, to be transparent, and at what point does medical underwriting come into play in general? I know each carrier is a little different, but I'm trying to maybe put people's mind at ease that are watching.
Yeah. And that's one of those misconceptions about life insurance is they've heard about one product or one type and they go, it's all that way. And I say there is different products, different carriers for every type of situation. So if you're somebody, and I would say is this, the analogy kind of would be also is this as well. If I walked into the Chevy dealership looking for a car, am I walking out with a Ford? Probably not. I've walked into a Chevy dealership. And I always say is this, people sometimes say is I've walked into whatever insurance carrier they've walked into. That insurance carrier is selling that product of that carrier, when quite honestly, the best product for you may be a totally different insurance company. So you want to get with somebody like ourselves that kind of independently looks at all the carriers, because if you've got a health issue, or if you're extremely healthy, or if you've got 2 kids, no kids, you've got a business, you don't have business, like you need somebody that's going to advise you of all the carriers and the best product or car that fits your needs at your time, and then marry that with the best way to acquire that product. You wouldn't just look at an asset and be like, there's the asset I want, but I have no idea I'm going to buy it. You'd kind of look at it in tandem, and that's what we do.
And to wrap it up, as you just gave me the car analogy, you and I love to use analogies. Many vehicles come with a warranty, right? And maybe part of a life insurance policy, especially for my wife and I, who we have our both of our parents living out of state, is a disability rider, right? Because quite frankly, the chances that you become disabled are much more than you pass away under, let's say the age of 50 or 40. So I look at the disability as piece is kind of like a warranty on the policy. Are you finding that most, policies or most I say taxpayers all the time, right? Most people look for that disability rider as part of their life insurance as well?
They do, Chris, and I think that the biggest gap in the marketplace is this.
This podcast is sponsored by Reps Tracker. Are you a real estate investor who is bogged down with the huge tax burden? Real estate investing can open the door to powerful tax benefits. Reps Tracker can streamline the process of accelerating these opportunities. To take advantage of a special TTF community discount, go to teachingtaxflow.com/reps, REPS, and use the code IFG. Better yet, click on the link below in this episode's show notes to go directly to the Reps Tracker sign-up page.
Is most people, they're not against life insurance. They're not against disability insurance. They're not against long-term care insurance. We're not against it, but we just don't want to pay maybe those premiums. We want to pay that sizable premium. And it's no different than I said to everyone listening, hey, the house you're living in today, if I said you cannot have a mortgage, you cannot have a mortgage, you had to buy that house all cash and you had to tie up all your capital in that house, you might say, let's look at renting. I don't have to tie up all my money.
Right.
And so I'm saying is a lot of times we want the insurance, but we've never been exposed to the different ways that are available to fund that insurance. So again, if I could say to you, hey, let's get disability insurance to cover if you got sick or injured. Let's cover the life. Let's cover long-term care expenses. Let's cover it, but let's not tie up our dollars today. That might be a conversation worth having.
And I agree. And just as we put a bow on this, I'm telling you that it's so important, as we talk about in the Teaching Tax Law community, to build your board of directors. And, and looking at when you're doing tax and financial planning and risk management, they all tie together and I can't tell you how many times that we've worked with people that are, that maybe they're going to get a pension. Maybe they work for the state and they're married and they're concerned that, they want to get the best result possible. So they want to have their, if when they retire, they get the highest amount of monthly capital, but they're worried about their spouse, and you can hedge those bets with life insurance. So it's really an important piece of someone's puzzle, is my point. And
That's right.
And we're excited that you're able to provide us with the knowledge you have. And again, we're excited that you're part of the Teaching Tax Law community.
I'm excited to be a part of it. And I will also say parenthetically, is if you haven't looked in life insurance with the cash value component of life insurance, we've talked a lot about the death benefit component, why to have a death benefit for life insurance. But the cash value associated with life insurance, again, is a liquid, tax-free on the growth, tax-free on the distribution. I'll also kind of say this. Anytime anyone has ever heard of super creative tax strategies around distribution of assets, like so-and-so paid no taxes on this, it always involves an insurance-based product. Always, 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 because it's the only thing that comes out tax-free. And so I always say is if you haven't looked at life insurance as a tax-free distribution vehicle, it may be something you want to take a look at.
Absolutely. And, it's funny because people look at their mortgage and refinancing their mortgage all the time. And so final thought is, if you have a policy in place, take a look at it. We always take a look at our mortgage, take a look at a restructuring that or refinancing it and to get you maybe the better results. So, Jason, again, thank you so much. John, thanks for all your input today, John. We appreciate you.
Oh yeah. This is a rarity. And my wife does not listen to this show, but she should, because that way she realizes that I can't actually shut up and not say anything for an extended period of time. She'd be proud, maybe. We'll see. But honestly, both of you, I think we accomplished the goal of this, right? Like, we took something that a lot of people, actually, we took two things that maybe a lot of people avoid. They avoid taxes, or try to, and they avoid having any conversations around life insurance. And I'll wrap with this one. If I almost guarantee a lot of people are listening to this or watching this, and they say, oh man, I don't want to talk to anybody about this. And I'm glad I can say this because we're recording this virtually and both of you are about, I don't know, 600 miles away from me. For the longest time, I tried to avoid anybody that's a financial advisor or tax related, and anybody that wanted to talk to me about insurance. And those are probably the most impactful conversations you can have. And Jason, I really appreciate you talking about it and really emphasizing the fact that you're not going to walk in, you're going to have a conversation with someone. They're going to say, yes, this is the water bottle for you. This is the only one we have. You have to go with this one or don't get anything at all. There's options for everything. So I look forward to the rest of our conversation, man. We'll have to have you back here. We didn't scare you off.
Thanks, John. Thanks, Chris. I hope to be around for 200 plus someday.
All right,
Hey,
let's do.
Let's do it.
Well, hopefully
We'll be
our life
here.
insurance policies don't pay before then, right?
Yep. Awesome, guys. Well, I appreciate it so much. And everybody that's watching this or listening to this, subscribe to the YouTube channel. Check out the content. You're going to be seeing a lot more from this gentleman over here, Jason, for joining us. And everybody, you have a great, great week. Again, we're coming up on that milestone number of our episode. So we'll pop out some pretty good content, some pretty good topics for you. So have a great week, like I said, everybody, and we'll see you back here again on the Teaching Tax Flow podcast. See you soon.
The information in this podcast is educational and general in nature. It reflects the opinions of Teaching Tax Flow and does not take into consideration the viewer's personal circumstances. It is not intended to be a substitute for individualized financial, legal, or tax advice. Consult the appropriate qualified professional prior to making any decisions. Securities are offered and supervised through Cabin Securities Inc. member, FINRA, SIPC. Investment advisory services are offered and supervised through Cabin Advisors LLC, an SEC registered investment advisor. Chris Picciurro is a registered representative of Cabin Securities and an investment advisor representative with Cabin Advisors LLC. Teaching Tax Flow is an independent entity and is not affiliated with Cabin Securities or Cabin Advisors.